Members of the committee, we are now live.
Okay. Since we don't have a chair and I'm vice chair, we'll call the meeting to order. The first item on the agenda is election of chair. So I'll open the floor at this time for nominations. Mayor Davis.
I nominate Councillor Carpenter to be our chair for 2020 and 2021.
I believe you can't do it for 2 years, but
Well, he's going to be doing it for 12 months from now. I guess you're right. It's only good to the end of the year. We'll have to look at it again in January. So
I believe so, yes.
Yeah.
And Councillor Vanderstelt was seconding that. And it's the peace sign.
That's the 2 sign. And as well, the peace sign. Yes, that's correct.
Yes. Councillor Carpenter, do you accept the nomination? You have to unmute to talk.
I do.
No, you're muted again.
no, you're muted again.
I do, with thanks to my nominator and my seconder.
Any further nominations? Seeing none, we'll close nominations, and Councillor Carpenter, you're acclaimed as chair. The meeting is yours.
Thank you, Councillor Martin, Vice Chair. Attendance has already been noted by the clerk. Members of the committee, are there any declarations of pecuniary interest for items appearing on the agenda? Seeing none, there's no delegations for today's meeting. Can I get a mover and a seconder for all items of consideration and consent items not separated for discussion purposes? Moved by Councillor Vanderstelt, seconded by Councillor Martin. Okay, please note the auditor will be automatically separated as there is a presentation. Is there any items that need to be other items that wish to be separated? And members of the committee. Mayor Davis.
Yeah, I'd like, well, 6.2.4. I think we should be separating that. That's the only one that I'm interested in separating.
Councillor Martin, I saw your hand up.
Yeah, 6.2.2 and 6.3.3.
Is there any other items for separation by members of the committee? Okay, seeing.
You're muted again, Councillor Carpenter.
Yes, I keep forgetting to press that button.
You'll get the hang of it.
Yeah. With no further items separated, I now call a vote on all items for consideration, consent items that were not separated for discussion purposes. And will those items are, well, the audit was already separated. That was 6.2.3 capacities on designated public institutions. I'm gonna go on my list. 6.31 Treasurer's Annual Report on Leasing, and 6.3.2 Treasurer's Investment Report, and 6.3.4 the Quarterly Status Report. And the Finance Committee minutes 6.3.5.1. They'll call a question of those.
I don't have my iPad, so you just have to take yes.
All items not separated for discussion purposes carries on a recorded vote of 4-0. Members of the committee voting in favor are Mayor Davis, Councillor Vanderstelt, Councillor Martin, and Councillor Carpenter.
Um, 6.2.1.
Councillor Carpenter, may I suggest that since you're the chair, you leave yourself unmuted all the time?
I like that idea, Councillor Martin. Thank you very much. So, okay. So I think we moved to 6.2.1. We have a presentation for that, do we not? Julia? Well, no, I guess we go through these items first, and then we're going to go to the presentation, come back to it. Is that how we've got this scheduled on this agenda? No?
through the chair, we'll need to have a motion on the floor, putting all items
Oh, yes,
for consideration, and then we'll, yeah.
Mover for all, motion on the floor, Mayor Davis, second by Councilor Vanderstelt, so they're on the floor. Okay, thank you. Now we're into the presentation. Thank you.
Good afternoon, everyone. Through you, Mr. Chair. My name is Julie Bates, and I'm a partner with Millards and in charge of the audit, as well as my fellow partner, Jennifer Chowan. Sorry about that. And she will take you through the financial statements. And I'm going to go through the report to the Finance Committee.
And turn your
Someone in the
phone off.
house has not answering the phone. Just 1 second. My apologies, the home line never rings. So with the report to the Finance Committee, so this has been prepared to facilitate with those of you charged with governance, and it is required by our Canadian auditing standards. And the standards require us to communicate our responsibilities in relation to the financial statement audit, our plan, scope, and timing, our independence, as well as if there was any significant findings in the audit. We flip over to page 2, that is labeled number 2, it's audit scope and responsibility. So this year we are offering a clean opinion on the consolidated financial statements for the Corporation of the City of Brantford at December 31st, 2019. And in our opinion, the accompanying statements do present fairly in all material respects, as well as the consolidated financial position at December 31st, 2019. We have conducted our audit in accordance with the Canadian Generally Accepted Auditing Standards. And with respect to other information in the annual financial report, we have reviewed this information and we found no discrepancies between the audit work that we did to complete the audit, which was then input into the annual financial report. Our audit does not cover the section in the other information, but we are required to review it. And we concluded that there was no discrepancies within that. And that kind of trails over into page 3. It then goes into a list of responsibilities of management, as well as our responsibilities as the auditors. And this will be the exact audit report that you do see in the actual audited financial statements that Jennifer will be reviewing shortly. On page 5 is respect to independence. As external auditors of the city, we are required to be independent of the organization. So throughout the year, we do monitor this. We did issue a letter at the finance meeting back in October, and our letter was dated October 15th. This is ensuring that we are not aware of any staff or partners at Millards with any existing relationships with any staff, management, counselors, etc. at the city that may impede on our professional skepticism, as well as any judgment or independence. With respect to the responsibility of management, the preparation of the financial statements and including the notes is the responsibility of management. And we do work closely with management to ensure that all disclosures have been taken care of and that are necessary. And we work with the management to ensure that we do have everything captured in the financial statements. Management is also responsible for selecting the significant accounting principles used in the preparation of the financial statements. And it is these policies that we use to design our tests and perform our tests to ensure that the statements are in compliance with the policies selected by management. Throughout the course of the audit, we asked several questions, received documentation, we have lots of audit inquiries, and we've also obtained a formal representation letter from management at the conclusion of the audit to ensure that we've been privy to all information, access to individuals that we require to speak to, and there's been no information withheld from us. On page 7, we do start into the reportable matters. Just kind of a bit of a list. The significant accounting policies, as previously mentioned, they are disclosed in the notes to the financial statements. And through our tests, we have not noted any significant or unusual transactions. We have materiality this year is set at $2.4 million. This is an amount that we as auditors determined to be an amount that if there was an accumulation of errors or a single error up to this amount, or exceeding this amount, it would affect the users of the financial statements. So as we do our tests throughout the audit, if there's any differences, we accumulate these on a list that we call a summary of unadjusted audit differences. And this year we can report there was no unadjusted audit differences. Any discrepancies we did find were discussed with management, and adjustments were made necessary, and there was nothing that was unadjusted this year. With respect to misstatements, misstatements can arise either from an error or just by an unintentional misstatement, or we have fraud and other irregularities, where these would be more of on the intentional side. In conducting our procedures, we did not identify any misstatements arising from fraud or other irregularities. With respect to internal control, management is responsible for the design and operation of an effective internal control system. And as part of our audit, we do review the internal control system, but our opinion is not covered on whether these controls are an audit opinion on these controls. However, we are required, if these controls, if there's a significant deficiency, that they are to be reported. And during the course of the audit, we did not discover any significant deficiencies in the internal control. I'd like to report that we had excellent cooperation from all the staff and management over at the city during the performance of the audit. We were lucky this year, we were able to get all the field work done prior to COVID shutting the city down. So there was just some cleanup things after the March break that we had, but the bulk of the field work was done, I believe, the first week of March. So that was already there. And once again, we received excellent cooperation with respect to everything. And the final page just talks about some upcoming changes that we have for the Public Sector Accounting Standards Board. So we will work closely with management to ensure that they're on side with the disclosures that are required with them, and ensure that any adoption and anything that needs any assistance in the adoption of that, we will definitely assist in those. If anyone has any questions, I'd be happy to answer them.
Any questions from members of the committee? Mayor Davis.
Yes. Julie. So looking at the, just make sure I'm on. Yeah, okay. So I'm looking at the reportable matters.
Mm-hmm.
And it says under internal controls. Through the course of our audit, we did not discover any significant deficiencies in internal control. Does that mean you didn't discover any deficiencies that accrued problems totaling $2.4 million?
No, what that means is when we review the internal controls, we ensure that there's controls in place to mitigate anything such as fraud or any irregularities in that nature. So if there's not a segregation of duty, or if someone's signing off their own timesheet, or approving a purchase order that they shouldn't be. These are the tests that we perform to make sure these controls that are supposed to be in place are in place. And through our testing, we did not find anything that was not how it was described to us that it should be working. So there was nothing unusual in that sense.
So do you do like kind of like a spot audit?
Yes, so we determine just based on, we do use a software called IDEA. So certain GL details would be imported into the software, and the software itself would randomly select. If there was any anomalies found in there, then our sample selection would be expanded. So there was nothing in our sample selection that we determined that we would need to expand as there was a deficiency.
Okay. So were there any insignificant deficiencies in internal control?
I would say any internal control system is never perfect, but there's nothing that would be pervasive enough that would need mentioning. Everything, everybody has great segregation of duties. Things are signed off appropriately. There's proper levels of authority, and the reviewing process going up within the finance department is very good. They have lots of levels. Staff is doing work, managers are reviewing, senior managers and so forth are reviewing, and there's always conversations going on between that finance staff as well as us and questions. So they're all very well educated and aware of what is going on the day-to-day operations.
All right, and through the chair, are there So the reportable matters, you're talking about the audited financial statement. There's nothing of significance to report to us that we need to be concerned about. But you spend a lot of time over here. You look at a lot of the system, speak to a lot of staff. From your perspective as a professional accountant, is there anything we might want to consider? Any improvements in process, internal controls, anything like that? It wouldn't be required for you to give us sort of a sign off on your audit, but something you may have observed that you might say to us, might want to consider doing this. You know.
Nope, there was nothing this year that came to our attention that would need to be communicated to you.
Okay, good. Thank you, Chair.
Thank you. Are there any other members of the committee who wish to ask questions?
Oh, and I'm sorry to interrupt, Councillor Carpenter. I also have the comments on the financial statements. If you want me to proceed, or if there's still questions for Julie, I'll pause.
Yeah, I'm just gonna
Okay.
I'm just gonna deal with the questions for Julia first.
Yes.
There. And seeing that, I have a couple, Julia. The 2.4 million in material matter, has that number changed over the years since last year? Is that the standard number?
I believe it's slightly higher. It's typically based on a percentage of revenues.
Okay, so it goes up.
Typically like 1%. So if you have increased revenues, then the materiality would go up in relation to that.
Okay, and then one final question for you. Is there any reason that you would need to speak to the committee in private as just the committee and yourself?
No, we're not aware of any at this time.
All right, thank you.
Thank you.
Okay, Jennifer.
Okay, thank you, Councillor Carpenter. So as Julie mentioned, I'm just going to provide a brief overview of the consolidated financial statements. Page 53 of 270 in your package, the financial statements provides the city's consolidated statement of financial position. And before I highlight matters in this, it's important to note that the consolidated financial statements contain not only the results of the city's operations and committees and local boards for which the city has control. It also includes the Brantford Local Housing Corporation, the Downtown Business Improvement Area, the Municipal Nonprofit Housing Corporation, the Police Services Board, the Public Library. In addition, in 2019, the John Noble Home was consolidated on a proportionate basis. Finally, the results of Brantford Energy Corporation are also included in the consolidated financial statements on a modified equity basis, which is required by Canadian public sector accounting standards. In terms of the consolidated statement of financial position, it presents the consolidated financial assets disclosed by significant line items, in addition to the consolidated liabilities. In addition to the standard accounts payable and accrued liabilities and deferred revenues, it also includes estimated liabilities for post-employment and retirement benefits, along with the liability for landfill closure and post-closure, estimated remediation costs for contaminated sites, and the liability related to boundary adjustments, along with the city's net long-term liabilities. As you can see, the financial assets less the liabilities represent the city's consolidated net financial assets of approximately 158 million. Non-financial assets include tangible capital assets, inventories, and prepaid expenses. The tangible capital assets, you'll note, are significant and include the city's land, buildings, machinery, equipment, and other infrastructure assets. The city has consolidated net assets of approximately 912 million at the end of 2019. On the next page, so page 54, 270 in your package, is the consolidated statement of operations. It presents the revenue by significant sources, including taxation, user charges, government transfers, and other revenue. It also presents expenses by function, and a schedule of segmented information is presented on page 88 of the package, and also provides details about the expenses by nature. Other income and expense items are also included, including amortization, any disposal gains or losses, and the change in equity of Brantford Energy Corporation. In 2018, you'll note that other revenues were approximately 42 million, and in 2019, other revenues were approximately 8.5 million. And you'll note that as disclosed in note 24, there was a significant one-time gain on disposal of tangible capital assets, inventory, and land in 2018, which was not repeated in 2019. The net result is that the city's annual surplus from operations for this year is approximately 20 million. And I'd also like to highlight that budgeted amounts are presented on this page. The budget amounts are required to be presented in accordance with PSAB. So it's important to refer to note 28, which describes how the city's net approved budget of 0 is transformed to comply with public sector accounting standards by including items related to post-employment benefits and other non-cash transactions. So with that, I'll keep the summary brief, but if you have any questions regarding our approach to auditing the amounts or disclosures in the statements, I'd be happy to address them, and we can also respond to questions about the amounts, also with commentary from city staff. Thank you.
Just a comment, Jennifer. Your numbers don't correspond with our numbers.
Oh, okay, sorry.
Because you've got the full package. Ours is broken down into
Okay.
categories, so the numbers are different. So the actual page of the report would be more helpful than the
Okay.
page in the total package. And I have
It
the
was-
mayor.
Yes, there's
Right.
page 47 and page 48 of the financial statements.
Yeah, and Mayor Davis is first. Thank you.
Thank you, Chair, and through you. Thank you, Jennifer. Looking at page, I guess it's 60 and 61 of the report. 66 and 67 of 270. Brantford Energy. So is this book value, market value? Is one and the same? Like, what do these numbers tell us?
So these are the summarized results of Brantford Energy Corporation. They're presented, it's important to note, in accordance with IFRS, which is a different accounting framework than PSAB. And they're brought into your consolidated financial statements on a modified equity basis. So it means that only the net investment in Brantford Energy Corporation is the line that feeds up into the statement of financial position. So these are the numbers in these that are reported in this note will be dependent on the accounting policies of Brantford Energy Corporation because they are maintained separately from the cities.
Right, because I'm looking in specifically at page 61, okay?
Yes.
And so it's got, current assets, liabilities, etc. And is goodwill in any there, in there at all?
I don't have these results here are summarized, and I don't have the full financial statements of Brantford Energy Corporation in front of me, but these amounts would be detailed in the full financial statements by the auditor and management of Brantford Energy Corporation.
Yeah, but Jennifer, what I want to know what these numbers represent. Do they represent just like the hard value of assets like cash and equipment and property? Or is this based on, a multiplier of net revenue? I assume probably not the multiplier.
They would be based on hard asset values presented in accordance with IFRS, in accordance with the policies chosen by Brantford Energy Corporation. So unless they were declared to be at fair market value, they would not be at fair market value.
Okay, so this is really book value.
In most cases, yes. IFRS is quite a complex accounting framework, which is why I don't want to give a definitive answer because reference should be made to the notes to the financial statements for the accounting policies.
Thank you, Jennifer. Answered as only an accountant can answer. But, I think I understand what this means.
Okay.
Thank you. That's it, Chair. For my
Okay, thank you, Mr. Mayor. Any other comments from the committee? Councillor Vanderstel.
Thank you, Mr. Chair. Through you to Jennifer. Thank you for this great report. Very, very detailed and easy to read. The obligatory reserve increase, 19 million. As we, I think we're ranked third in Canada and Canadian growth in Canada in Brantford here. Are we legislated to increase our contribution to obligatory reserve funds based on our growth? And if so, who legislates that? Who's that legislated by?
The obligatory reserves stem from several different areas, so I would defer that question in terms of who requires it to city staff because the requirements will come from several different areas.
I can jump in and answer that question. So the obligatory reserve funds are essentially monies that the city's holding as a liability because there are significant constraints on what the city can use that money for. So most of our obligatory reserve balances come from the developers in the form of development charges, as well as federal and provincial government with respect mostly to gas tax, but some other minor funding programs as well that have significant restrictions on what we can spend the money on.
Okay, and who sets that standard? I mean, sorry, through the chair to you, Joel. Who sets those standards? How is that just general practices, a benchmark? Who determines how much we have to contribute to the, what's the obligatory part? Who sets that?
Yep, through you, Mr. Chair. So there really isn't a municipal contribution to any of these obligatory reserves. These are all either developer money that's come into the city from developers to be used for a specific purpose, or money that's come into the municipality from other levels of government that need to be used for a specific purpose. So there's no municipal user rate or tax dollars that are going into these obligatory reserves.
Okay, and as we continue to grow, we can expect to see more revenues generated from that account or those accounts as well, correct?
Through you, Mr. Chair, certainly when we look at funding from other levels of government, that's going to be determined by them. We see gas tax allocations usually increasing by some inflation factor based on census every 4 years or so. Development charges are based on the level of growth and what the level of growth we're having and what we collect right now. And certainly as we grow as a city and undertake a new development charges bylaw and see DC rates increase, as long as development happens the way we expect it would, we'll see more contributions, but certainly more projects that will require those funds as well.
Okay. Thank you. Do I have time for another question, Mr. Chair?
Yes, you do.
Okay, so page 26 of the report, I believe, there's a reference to net proceeds of the sale from Arrowdale, which go towards affordable housing. But as far as I recall from the resolution that council passed, there is an additional funding source that would come from taxes levied from the former Arrowdale lands after they're fully built out. And those revenues also go to affordable housing. I noticed that there wasn't a bullet point that specifically stated that. Is there a reason why that was not included on page 26?
Through Mr. Chair, you are correct. The resolution did indicate it was multifaceted and that there was approval by council to also contribute the future property tax revenues to the reserve as well.
So,
yes.
Sorry, is there a means by which we could add that in at some point?
Can certainly look at doing that.
Okay, thank you very much. Appreciate it.
Yeah, we can make that amendment before it's submitted and finalized and posted online.
Thank you. Mr. Chair, I had one other question, but it's kind of tied into the casino issue with the funding issue, and I'll wait until that comes up later on.
6.4, okay, thank you. Any other comments? Seeing none, just to wrap up on the obligatory reserves. Obligatory reserves are reserves that we have made commitment to either by legislation or by agreement. And they're committed to specific funding and cannot be adjusted otherwise.
Sorry, so there are commitments that we've made.
The commitments is the development charges for development purposes, yes, to the different development streams.
Okay, thank you.
Okay, thank you. Okay, seeing no further questions, I'll call the question on the resolution, which is that the Corporation City of Brantford audited consolidated financial statements for the year ended December 31st be received. Mr. Clerk, there we go.
Mayor Davis, do you vote yes?
Yeah, sorry, yes.
Item 6.2.1, 2019 Annual Report and Audited Consolidated Financial Statements carries on a recorded vote of 4-0. Members of the committee voting in favor are as follows: Mayor Davis, Councillor Vanderstelt, Councillor Martin, and Councillor Carpenter.
Thank you. Now we'll move on to 6.22. And I think I call a question on that now. Do I call it? Yes, I call a question. We did call a question. Thank you. Councillor Martin, 6.22.
Thank you, Mr. Chairman. Page 4 of this report, it talks about nonprofit housing, and there's a surplus going into the reserve for that. A question through I don't know if there's anybody from social services here or not, but my question is, if this reserve gets high enough, is it used to pay down mortgages to reduce our future expenses?
Good evening, councillors, and through the chair, I'm Kevin O'Hara, the Acting Director of Housing Services, and I'm appearing on behalf of Aaron this evening. So good to see you. Through Mr. Chair, Councillor Martin, the mortgages, I'm not sure if Joelle would wish to speak to it too. They are at a fixed rate for the debentures and the mortgages on the owned portfolio. Any surpluses that we have would typically going to the reserves that the council has designated. We don't look to pay down those mortgages in advance because of the way that the financing is worked into the Housing Services Act and the financing model. Joel, not sure if you want to add to that.
Through Mr. Chair, I will just confirm that the surplus here does go into what is historically known as the Mortgage Stabilization Reserve. One of the original purposes with that reserve was to assist sort of our partners if they ran into issues with their mortgages. I don't think we've seen a whole lot of that lately, but it certainly is one of the original reasons for establishing that reserve.
Okay, is it still needed?
Through the chair again, Councillor Martin, the Mortgage Stability Reserve is also coming forward in future consideration items for council, as I understand it, and Joelle might speak to that. We are looking at it as a stabilization reserve for housing providers as they do reach end of mortgage, and as the funding arrangements through the Housing Services Act are revised by the Ministry of Municipal Affairs and Housing. Those housing providers often don't have a sizable capital reserve to cover capital costs in future years to maintain their buildings. And so that reserve would be handy to help set up a type of revolving loan fund for providers that don't have enough funds, for example, to replace a roof on their high-rise building, to make sure that that stock is maintained. So we're looking at moving it from a mortgage stabilization reserve to a housing provider stabilization reserve.
Okay, and I'm assuming then that money would be lent at market rates?
Well, through the chair, Councillor, we would certainly present that issue to council for consideration in terms of what rates and how that revolving fund would work.
Okay. On the next page, the Brant Community Foundation, why is that under financial policy too?
Through you, Mr. Chair, there was some approval a few years ago to add a new category of grants into the envelope of categories of grants that the Community Foundation issues. It was for it was a larger grant for capacity building, I believe, and those grants would be over 1 year term. The clerk might be able to speak better, but we're talking 2 to 3 year commitments. So we wanted to ensure that any funds left at the end of 1 year and what had been allocated to the Community Foundation in that year could be carried over so that they could be accessed to pay the multi-year commitments.
Okay. Page 7, housing. This is part of the reason for the surplus is landlords are not refilling units with tenants requiring rent supplements. Is this contributing to the housing shortage that we have for affordable housing?
Through the chair, Councillor Martin, I would say that it's a symptom of the housing shortage in that because landlords can rent to market rent tenants and aren't necessarily seeking affordable housing arrangements through a rent subsidy provided through the rent supplement program. They are looking to the market rent levels that they can achieve, and if they can exit those agreements, they exit them. We are having some success at renting, increasing rent supplements. Just this year, we have added some rent supplements in some of the federal nonprofit housing providers that have reached the end of mortgage and are not included in the Housing Services Act. So we're able to maintain RGI service levels with those providers by adding some commercial rent supplement units in their portfolios that are now free of their original federal operating agreements. So we do look to continue to rent up new rent supplement units, and we are working to achieve that whenever possible. We do have to realize that there is an end date to the Strong Communities Rent Supplement Program that is largely funded by the province, and that end date is 2023. We're still waiting on how that program will end, or if it will be extended, in fact. So that gap that we do have right now in the rent supplement portfolio, especially the commercial rent supplement portfolio, may come in handy in a couple of years' time when those recipients of a rent subsidy may need a different type of rent subsidy.
Okay, and are those subsidies given to the tenant or paid directly to the landlord?
Through the chair, Councillor, most of the subsidies in the rent supplement program are provided directly to the landlord. In fact, the vast majority are provided directly to the landlord. The only instances where we provide a subsidy directly to tenants would be under the housing allowance programs. And in that case, many housing allowance clients also like that subsidy to go directly to the landlord. So we do send most of our supplement dollars directly to the landlord.
Okay, thank you. That's all my questions.
Thank you, Councilor Martin. Any other questions? I have a few then, if there's no other from the committee. Page 5, the NEAR program, that's the 2.3 million. Wasn't it roughly the same amount last year?
Through Mr. Chair, yes, it was a similar amount. Yes, we've been in a surcharge situation for the last 2 years.
And you can remind me how we paid for that last year?
There was a reserve that had accumulated from years in which we had been in a surplus position. We maintained an accident prevention reserve, which saw those surpluses accumulate over time. We did use that to reduce the surcharge experience last year, and we've accessed it partially as part of the 2020 budget to help mitigate the impact on this year's surcharge as well.
And you're thinking that this will be the last year of this program, or 2020 will be this year now we're in now will be the last year of the program?
Yes, Wsib has entered into a new rate framework. So we have seen our premium rates increase, and along with that rate increase, they've moved away from this NEAR regime. So there will be no more experience ratings happening. So all our risk will be a part of our premium and no surcharge or deficit reconciliation done at the end of the year.
So will the risk be shared across the province? Is that the idea?
Yes, basically yes.
Okay.
You'll be paying it through the premium up front, so that there's no surprises at the end of the year.
Okay, thank you.
So they're in the first year of building up those rates, but we are expecting to see premium increases over the next 3 years to get to the level that we need to be at.
That doesn't mean that that 2 million won't be part of our, but it'll just be part of our regular premiums. Still could be an increase of that much annualized.
That's correct. And we have, council did approve a plan through the estimates process to phase in those budget increases along with phasing out the balance in the accident prevention reserve to be able to phase that in over a couple of years with as minimal impact as possible.
They're automatically there. I see the mayor's hand up, so Mayor Davis.
Thank you, Chair. Joelle, I'm looking at page, it's 3 of the report, it'd be 229 of 270. So the overall, make sure I got the right page. Nope, got the wrong page. But in terms of the surplus, so there's no surplus that's coming for 2019, right? It's a deficit of, yeah, page 223. It's a deficit of 44,386, right?
Yes, that's correct.
And what's the comparative for last year, for 2018?
For 2018, we had overall $1.6 million surplus.
So does that create a problem for us in the sense of preparing next year's budget? Or does the surplus, is it used in such a manner that doesn't really affect the following year's budget?
Correct. So we are recommending that this small surplus would be funded from the contingency reserve. So we won't be having to build that into next year's budget. But typically in years where we have seen a surplus, the recommendation that's usually adopted by council is to replenish our corporate contingency reserve first, and then any excess to go to the council priorities reserve, and then that contingency reserve can be accessed in years where we would experience an operating deficit.
Right. Where does that sit right now?
Just sorry, just
Contingency
to
reserve.
clarify, the balance of the contingency reserve.
Yes, sorry, that's the proper term. Yes, the balance.
Yeah. Yeah, the unallocated balance currently is about $595,000. So the actual cash balance currently is about $1.4 million through the May COVID report. Council did approve to earmark $750,000 of that to mitigate the impacts of an operating deficit in 2020. The remaining balance after that commitment is $595,000. We'll use that to access to pay for the 2019 deficit of 44,000, and then the remaining is still available.
And historically, what has the average balance been? I know it goes up and down, but what's the range usually?
The corporate contingency reserve at any given time, we would, ideally, we'd like to keep it topped up at 1.25% of the operating budget. It's not been at that level for a while, but if we had surplus in 2019, we would have first used that to top it up to 1.25% of the budget.
Yeah, through the chair, 1.25%. That'd be what, about $2 million?
$0.62 million.
Yeah. So should we be nervous that our contingency reserve is at the low end of what we normally experience? Like concerned?
It really is just going to be used for these extraordinary circumstances such as this. Certainly if we move forward into 2021 and we're still experiencing the financial pressures that we're seeing right now, mostly due to the COVID pandemic, there may be some issue for concern, but it's not going to be just our concern. All municipalities are going to see that, but certainly with some of the relief in the announcements made today, hopefully we'll be able to recover from that.
And Joelle, if I could just add to that, we use the results of these variances to help us budgeting in the next year as well.
Right. So we don't have to hit the panic button just yet.
Well, the province would appear to have been very good to us this afternoon, so not maybe quite yet.
Yeah.
We can hit pause.
Okay. All right. Thank you, Chair.
Thank you, Mayor. So on that note, though, the province has announced funding that because we're balancing these accounts, that won't be a problem. Our experience and our expenses related to COVID will still be part of that funding announcement that was announced today.
Right, so it came out in 2 phases. The first phase was, it's called the Safe Restart Agreement. Came out in 2 phases. The municipal funding phase 1, we got a little over $5 million, which we will get for our operating pressures sometime in the fall. It's on a per household basis. The second phase of that is going to be based on need, and we will have to report back to the province in March as to our need, and fill out another set of forms in October if we wish to apply for the next round of the municipal funding component.
But when do you see a report on that coming to this committee on how what the 5 million is being used for, what the expenses are?
So I would say in the fall of this year, we'll be providing that.
September, October?
Yes.
Okay, thank you. Mayor Davis, yep.
Thank you, Chair, and through you. So Kathy, the last time we received such a report, it was, I think, in May, and it was projecting a $5.5 million net deficit.
Correct.
So you're going to be updating that for us, a report sometime in September, likely?
Yes, we're just doing a variance analysis now, and Joelle can help me. Obviously, I've been away for a little bit, but we're expecting it'll be north of $5.5 million. But certainly what they did today is a great help.
Right, so it's not going to cover all.
It won't cover, no. It probably will not cover everything, no. They also provided us $1.3 million for transit to help us with our transit costs.
Right.
But probably it won't mitigate every dollar for dollar, so we will probably look at whether we apply for the phase 2 funding in the fall.
Okay. Thank you.
Mr. Chair, if I have permission to speak, Councillor Carpenter, Chair.
Yes, Mr. CEO Hutchings.
Thank you. It's to addition to the treasurer's comments, it's $5 million for operating. There's $1.3 million for the transit, as she said, but there's transit, as you know, is our biggest pressure at 883,000, I believe it was a deficit. So that was in the 5.5 million. And we are doing estimates, Joelle and Kathy were doing estimates, working with staff. In addition to that, there's just been announcements regarding the Social Service Relief Fund. It'll be about $2.2 million to the city. So that's in addition to this $6.2 million. But that monies can be used to cover social services costs, such as hostels where we had to split out, stretch people out, physical distancing. But the nice thing about it can be used for all that, the past expenses. It's also the province is now allowing us to look at future expenses for a future hostile situation or homeless situation or social services situation. So we can, plan has to be put together for past expenses and also future expenses by September 11th. So that should help our deficit out as well.
Yeah, and we have to put that plan together when and then apply for that funding going forward, right? Based upon what our past practice has been. Is that how you're going to do that?
Yes.
Okay, I see the mayor's hand up again. Mayor Davis.
Thank you, Chair. Every time a question's answered, it seems to lead to more questions. But that's because this announcement was just made this afternoon. So Mr. Hutchings, do I understand then, through the chair, so and this is new money, it's not repackaging something they promised to us in the past?
Yes, if I can through you, Mr. Chair. Yes, Mr. Mayor, as far as we're aware now, as you know, this is an hour hot off the press, and sometimes the details, we can find out more details, but as far as we know right now, this is new money.
So it's going to be 5.5 new money, 5.5 plus 1.3, that's 6.8 million.
So 5.0, Mr. Mayor.
Oh, 5.0, right.
And then 1.3, which is, we'll bring it to 6.3 million. And then there's new monies for Social Services Relief Fund. It's approximately 2.2 million, but that can be sliced. I wouldn't add that on to the 6.3. That can be sliced a number of ways. I mean, for past expenses, but also for future investments. So we're going to have to figure that one out as to how much it covers our current deficit and how much we want it to help us in the future.
So we got 6.3 for a budget deficit that was estimated in May of 5.5.
Yes.
But we know today that it's going to be more than 5.5, right?
I would strongly suggest that, so we don't have that final number in. but we're working on that. When we did that original projection, it was for, the COVID would be back up and running 100% by September 1, and we know that's not going to happen the next 3 weeks. So I would strongly suggest it's probably more than the 5.5.
Okay, thank you. Thank you, Chair.
Thank you, Mr. Mayor. Okay, any further questions? I have one on the cemetery's expense in the report on page 5 is a deficit of 59,469. That's part of the deficit of 44,000, the net deficit of 45,000, is it not?
Yes, that is correct.
Okay, and have we got an explanation as to why we didn't achieve the budgeted revenue that was expected in that budget?
I actually don't have a written explanation with me right now on the cemetery.
Okay, could you get that to us, to the committee members later on? That's fine.
Yeah, absolutely. We'll get you something before council.
Okay, all right, good. Thank you. Okay, any further comments? Seeing none, I'll have call the question on this item.
Yes.
Item 6.2.2, 2019 year-end operating budget surplus deficit carries unanimously on a recorded vote. Members of the committee voting in favors are as follows: Mayor Davis, Councillor Vanderstelt, Councillor Martin, Councillor Carpenter.
Thank you. And we're moving on to 6.24. And Mr. Mayor, I had you first on that one.
Yeah, thank you, Mr. Chair. Through you to staff. So I'm just going to have to get the report up. That's page 231 of 270. So typically from the casino proceeds, the Brand Community Foundation is paid about $700,000 per year. I got that right, did I not?
Through you, Mr. Chair, that is correct.
I got one thing right. Okay, so
So a portion of that is their admin fee, and then the remainder is what is paid out in grants.
right. So what is the admin fee? How much is that? What percentage is that?
Perhaps
I believe-
Vanya can help out there.
Certainly. So through the chair, the agreement is 10%.
Okay. And do we know how? I assume they don't necessarily remit, hand out grants totaling $700,000 exactly each year. So they must. Do they run like their own internal surplus, or do we keep that? And like, who keeps track of that?
Through the chair. So the way the process works is the foundation, through their committee, allocates the funding based on the different quarters and the different percentages included in the agreement. But we retain the funds with the exception of the 10% admin fee, and we pay the recipients directly from our finance department. So any surplus remains with us.
And so over the last 3 years, what has it averaged per year? Has it been, because I guess 90% is 700,000, 630,000 that should be granted, right?
So Joel may be able to add a little bit to this as well, but certainly they're the main categories generally expel most of what they would have allocated to them, that being the operational grants, the travel and seed, then there's city services and emergency. The capacity building is the one that builds over time. They've had fewer recipients come in, so that is a $200,000 stream minus the 10% admin fee. Those applications have reduced over time, leaving a commitment outstanding of $19,500 based on 2 organizations that are in their last 2 supplements of that program.
So that's this 458,000 you're talking about in the report. That's these capacity building monies that have not been granted, have not been paid out to a group organization applying for it. Because there just haven't been enough applications, right?
That's correct. Most of that has accumulated as a result of the capacity grants.
Okay, so this year we haven't flowed any money other than what, 20,000 to the the foundation?
There was a 20,000 one grant, sorry, through the chair. There was one grant administered at the very beginning of the year, previous to the COVID pause of the program. That was $20,000. So plus an admin fee on top of that.
All right, and so the admin fee, which would be 70,000, has that been paid to them this year?
Through the chair. So the way that the agreement works is that if there's no funding, then we provide a notice to BCF that payment would not come in full. So they were compensated for the work they had done this year and notified that we would need to pause the program, which led us then to today, leading through finance and to council to officially notify that the agreement needs to be terminated so that we can build a new program in the future with new funding.
Yeah, so Chair, I would, through you, I appreciate I'm taking a little bit, probably more than I'm allowed, but you know, I'm a little bit concerned about making a decision on this without hearing from the foundation. So have they been notified of this? Were they told if you want to make a presentation to us, you know, you should show up today and register as a delegate for this committee?
Through the chair, so they were notified for early on stages of the COVID experience. Then they were formally notified of the full suspension of the program. And then I did speak with the executive director as well, notifying that this report would then be presented to council, explained where we're headed, the situation that we're in, and then it would come through council. So they are aware.
Yeah, the reason why I asked that, Chair, is I noticed there's an option given to us in this report. It's at page 237 of 270, and it provides for some portion of the 700,000 being paid to the Brant Community Foundation until such time as the contract is fully renegotiated. And you know, frankly, that might be something I'd consider, having seen the more fulsome report on the casino proceeds, depending on what they tell us they need the money for, because we know that many of the groups that receive funds through the Brant Community Foundation, you know, they're having a tough time this year, right? Their traditional fundraising sources have dried up. So, I mean, we can't be the backstop for that, but, you know, not flowing any money might not be the best decision. I mean, clearly, we can't, I don't think anybody can expect us to flow 700,000 given what's happened with the casino, but there might be some portion of this that should flow. And so for that reason, I'd like to, I guess I'd like to hear from the foundation if they wish to give them an opportunity to come back to us, I guess at our September meeting, and you know, give us their perspective.
Yeah, I'll come back to you for a possible amendment, Mr. Mayor.
Yeah, so that's, I'm just floating that. I'm just kind of thinking off the top of my head here, but
Yeah.
Thank you, Chair.
Council Manderselt.
Thank you, Chair Carpenter. Yeah, no, the mayor almost stole all of my thunder on that one. I was up to page 238 and I realized that in the fall, whenever that is, that we'll be receiving of a report on this. Now, what I'm hoping for, there are a number of important facets to that funding and where that funding is funneled, not only funneled council priorities, but contingency reserve, as well as the community foundation. Is there enough time to bring that report rather in the fall to this location, but to the council priority session, so that we may have the information then? Because all of these three items for sure are of, I think, vital interest to council going forward. And we might be able to strategize, or at very least, have the conversation on where we're going to set our priorities for these three. Is it a possibility that that report that was going to come in the fall comes to priority session instead?
Madam Clerk. Ms. Daniels?
Anyone? Bueller?
There you go.
Sorry, so through the chair, I'd ask maybe that Brian Hutchings, maybe with the council priority session, is more involved in what may potential, but I don't see the agreement as it stands today doesn't tie into your priorities. So that would be something that would also potentially need to be addressed in the future, that if you were looking to align that program, which would be part of the review in potential options for a new program in the future.
Okay, I just thought it was an opportunity for a quick review. That's okay. Thank you.
Okay, I just looking at it, item C says the city clerk be directed to notify the Brant Community Foundation of termination of the current community grant program agreement and present a report to council's consideration on implementation of a new community grant program. Now, my understanding is, and the clerk can correct me, in the agreement, is the agreement requires us to give them 60 days notice of any change in the agreement of the program. So we have to announce termination of the agreement if we're going to adjust the agreement in any way.
Through the chair, that's correct. So it does have a 60-day termination clause. So that's what we were saying, that given the situation and the unknown facts with the casino, that we could look at terminating the agreement, or the alternative, which was proposed in the report, would be to direct us to look at a smaller agreement for the potential of a portion of the year using funds that as council decides, and based on which programs you'd like us to potentially run for a portion of this year, given that 50% of the program hasn't been able to run yet this year.
We would also have to find the funding for those programs that we're agreeing to run.
Through the chair, it's, certainly the other Joelle Daniels can certainly chime in as well. But yes, there's definitely, with the lack of casino funding that has been received by the city thus far, the program hasn't been supported yet.
Well, is there a way to, have you got some suggestions for amendments to item C that would notify the Community Foundation of terminate of the current agreement and consult with them on a future agreement and interim funding until such time as a future agreement is done? I think to answer the mayor's question and Councillor Vanderstell's concerns, and then we could have that also be dealt with at the priority session, because we put it into the resolution. Is there some wording you could suggest to make that happen?
Through the chair, there is actually on page, what would be 237 of 270 of the finance of the package, or page 7 of the report. There is a proposed amendment that could read something to this nature, that the city clerk be directed to negotiate an amendment with the existing agreement with the Brant Community Foundation in order to execute a partial year program, which would include the following grant type. So I'd be seeking direction on which grant types from within that current agreement, with a revised funding allocation based on the remaining months, and that such program be funded from, and then name a funding source. So I could give some figures on what a 50% program would look like if you wanted to run all programs based on that.
What I'm hearing is that we like to review the programs that we're running in the first place, if I'm paraphrasing Councillor Vandertel, as a priority for council, but we don't want to simply just cut the funding off 100%, if I'm listening to what the mayor says, without having some consultation on what funding is needed. So neither one of those resolutions actually do that. And so if there's a way to take what you've got on page 7 here and meld it into item C, so that we have to serve notice of the 60-day notice of termination of the agreement to change the agreement. We have to do that, as I understand, and we don't have anybody from legal here, but that's the agreement. But we would like to, in the process, talk to them about what programs we may want to fund in the interim, and have consultation with them on what the future agreement might look like. Did I capture everything, Mr. Mayor?
I think between the two of us, we can figure it out. So I'd say this, that, the contract hasn't really been reviewed in 6 years. So I'm agreeing that it should be terminated and renegotiated, and, a fresh look taken at it. And I agree with you, Chair, that clearly we got to give the 60 days notice. So the resolution recommended to us in the report, I can accept that. But I'm looking at this, the clause C option, and it's really hard to fill in the gaps without having had a conversation with the foundation, right? It's kind of a two-way street here in terms of how you fill in the gaps, like the amount and what the grant types would be. So I'd almost be inclined to put this on the floor as it looked with the gaps, and then I'm going to move that it be deferred to the next month's meeting. The C part, if you think that would do it.
Yeah, I think that's acceptable. So a motion to defer, separate and defer item C.
So I'm gonna move C as it appears in the report, which it has gaps in it, right? Which is the city clerk be directed to negotiate an agreement. It's really negotiating an interim agreement, right? So I'm gonna move that, seeking a seconder to get on the floor.
I got a seconder and Councilor Vanderstel.
Okay. And now, if you don't mind, I'd like to move that a separate vote be taken on, well, I guess, no, we gotta vote on.
That's the wrong item up on the screen there.
Yeah.
But we're not amending C, we're deferring C. So we've got separation, you've asked for separation for C. So let's, if we've got any more discussion on A or B. Seeing none, let's, did I see Councilor Martin's up? Councilor Martin.
Yeah, actually, I'd like to try an amendment, which I think would help with the whole situation. And that would be to suspend transfers to the Council Priorities Fund, the Disaster Mitigation Fund, the Cultural and Built Heritage Fund, and utilize that money in the areas where we're having shortfalls. I think that helps free up some money for dealing with the shortfall in the Casino Legacy Fund, and it might also free up enough money to allow for some kind of a grant program to go forward with the Community Foundation.
Okay, well, I've got it. Well, okay, we're on A and B. You're dealing with that under A and B. Well, that's the transfer is for the Community Foundation Reserve into the Casino Legacy Reserve. I have a comment from staff on that. Joe?
Yeah, through you, Chair. Can I just get some clarification on which transfers are being suspended? I caught cultural and built heritage.
Council Priorities, Disaster Mitigation, and Cultural and Built Heritage. They're ones that don't have any commitments as far as I can tell, and if we suspend transferring money into those, it frees up money to cover off deficits and other ones.
So through the May COVID report, Council did approve to use any of the funds that had been accumulated in the disaster mitigation reserve to date to be available to offset operating deficit for 2020. So there were some multifaceted recommendations that were approved there. One was the use of both the contingency reserve, the $750,000 earmark on the contingency, as well as whatever the full balance for the year in the disaster mitigation reserve was. So that is earmarked to offset a 2020 deficit. Certainly the cultural and built heritage allocation. I'm assuming you mean the 29, whatever we've flowed for 2020. Yeah,
and what I'm suggesting is not add any more money to any of these funds.
Right. Certainly, I don't see a financial concern with the cultural and built heritage, nor the council priorities at this point. Not an immediate concern.
Okay, so it's just the two then.
If we just mean future, we can keep the current balance in the disaster mitigation reserve, just not add more to that. I'm fine with that as well. And we'll use the current balance. I believe it's 195,000. We'll use that to mitigate the 2020 deficit. We just won't flow anything future.
Okay, you know what I'm going to do though, I want to go back and deal with item C first, because the mayor is first to defer that, and then we go back to A and B.
Well, I guess first of all, so I'm looking now at ABC. You know.
I click on it.
So I think I moved what I moved was an amendment to C, right? And that was the amendment suggested to us in the report. So I think I suggest we got to deal with that first. Are we going to put that, we'll call it modified C on the floor? So.
Okay, but that requires us to fill in the blanks.
I don't think it requires us to fill in the blanks.
No, you want to pass it as is, and we can name those programs. Where are you going to refer this to?
Well, first I wanted, so here's my thinking, Chair, that we get that on this resolution, okay? And then I asked for a separated vote, and then I asked for that C, amended C to be
deferred. I got you. Okay, sure. So, and you're doing this, we can do this by, and clerk will correct me, can we do this by substitution then? No, let's do it as amendment.
And then I
Let's
think,
call-
point of order, I think what Councillor Martin's talking about is, he's talking about amending B, I think. But-
Yes, he is. Yeah, so we'll come back to that. So let's deal with this item C as the amendment to item C. Questions on this? Mr. Clerk, please call the question on the amendment, to item C.
Yes, I'm a yes.
The amendment to item 6.2.4 casino funds update carries unanimously on a recorded vote. Members of the committee voting in favor are as follows: Mayor Davis, Councillor Vanderstel, Councillor Martin, and Councillor Carpenter.
Okay, thank you. So now we're back to A and B, and we're back to Councillor Martin's amendment, which was, I believe, to stop funding disaster mitigation is separated already. Cultural build heritage and council priorities. Is that correct, Councillor Martin?
Yeah, it's to stop adding any new money to the three. And because the current balance of the disaster mitigation is committed, what I'm saying is don't add any more to that, so that that money can be used to fund the areas where we have deficits.
And are
Or
you
we've
saying,
already made-
is that the same for all three then? Don't add any more money to it? You're not talking about taking the existing money in them? Okay.
Correct.
Be clear.
We may need to raid some of the other two, might need to raid those balances for things later, but at this point, what I'm suggesting is just don't add any new money to the three.
Okay, do we have a seconder for that? I'm not seeing a seconder. Oh, I do have Mayor Davis seconded. It's on the floor for discussion. Mayor Davis?
Yeah, so just so I understand, so the intent of B as worded originally was to get 435,000 into the casino legacy reserve to meet, which is, you know, the boundary adjustment to the county, the payment to the Y to make up the deficit there is
Yes.
what, so a question to stop. Is what Councillor Martin is suggesting his amendment, does that get us there to deal with that deficit in the casino legacy reserve?
Through you, Mr. Chair, that's going to be based on how the casino fares next year. So we'd have to respond to that using a number of assumptions. So even when we look at all of these reserves that we manage from the casino proceeds and put them all together, we're still in a net deficit position.
Yes.
Unless the casino sees, unless we see at least 50% of what we typically see in casino revenues in a year in 2021. If it's anything less than 50%, there's still going to be other decisions that council will need to make with respect to some of the commitments on those funds. And I'd also want to clarify when we say we're not going to, what's on the floor to stop contributions to these three categories. Is that an interim measure or something that would be done in perpetuity? Only because the council priorities reserve does have annual commitments on that as well. It does contribute annually a contribution to the waterfront master plan reserve, as well as just a small allocation for the Remembrance Day fly pass, but the significant one would be our annual allocation to the Waterfront Master Plan Reserve. So stopping contributions in perpetuity would lead to additional pressures in that reserve as well.
Yeah, sorry, I meant to include temporary until we get past the crisis with the COVID reduction in casino funding.
Does that help, Joel? I think, Councilor Martin, could you make that until such time as council does a complete review of the casino funding and
Yeah,
expenditures?
that's what I meant.
Okay. I think we're, that's going to be part of COVID and everything else we need to do. So.
Yep.
Okay. And the mayor's question of the 435,000, that's still available, is it not? as a result of this. So what the mayor's question was, that doesn't affect that. Councilor Martin's resolution doesn't affect that.
That's correct. The 435,000 is just an amount that's accumulated in another reserve, which is the funds that have allocated over time specific to the community foundation and are currently not allocated to any grant applicants at this time.
Yes. So as part of that review, we would still have an ability to look at that.
Yes. If the, right, yes. So if recommendation B is being amended to not include that now, it's still something that could be considered, and we would use those funds to transfer to the legacy as well. But in the documentation that I provided the committee last night, even with that transfer, we will still have to make perhaps some decisions with respect to 2021 commitments, should we not see at least half of revenues in 2021 that we typically do.
And we have the ability then to set in future finance committee agenda before that, how we can do that. Well, we'll need a meeting of all of council, I believe, to deal with the casino review, funding review.
Yeah, absolutely. We were intending to bring a report back in about 2 months' time that would provide what those options could look like, in the hopes that we would have a better idea of what the casino reopening plan would look like.
Okay, then so Councillor Martin's amendment is addition to B.
Okay.
Mayor Davis, sorry, you did have the floor.
No, I want to speak to the entire motion as amended once we deal with.
Okay, so let's deal with Councillor Martin's amendment then.
Yes.
The amendment to clause B carries unanimously on recorded vote. Members of the committee voting in favor are as follows: Mayor Davis, Councillor Vanderstel, Councillor Martin, and Councillor Carpenter.
Okay, Mayor Davis, you wanted to speak to as a whole, and keep in mind we have separation of A and B and C, and what I will come back to you for C for a deferral. And Mr. Mayor.
So a question for staff. So what portion of the 5 million that we normally receive, what percentage or portion comes out of slots, and what comes out of the table revenue? What's the rough breakdown?
Hey, Mr. Chair, I actually don't have that information in front of me right now. It's something the casino used to provide us, but with the privatization issues and some privacy issues about disclosing us that information, we haven't seen that on our quarterly statements for quite some time.
Wow.
Yeah, it's important we know that, because the way the stage 3 opening has them opening slots and then tables. So we're trying to estimate what we might receive in the way of casino proceeds. Really need to figure that out. So that leads me to my thinking on this, Chair, is that, you know, we're kind of going at this piecemeal. I feel really uncomfortable about this. We don't have the entire picture and projection of casino proceeds to the end of the year into 2021. And I know it's hard to project, but you can make certain assumptions and do that. And then now we're dealing with specifically with casino legacy, the casino legacy reserve, and that is an implication for the community foundation, and, you know, trying to make decisions without, I would think, fulsome consultation with them. So I'm really just feeling very nervous about making any decisions today. I'm not one to just defer for the sake of deferring, but I think on this one, there just isn't enough information to make these decisions. And I don't think it's urgent that we have to make this decision today or this month. Am I wrong about that, Joelle? It'd be nice to make the decision you put to us, ABC, but it doesn't have to be this month, does it?
To you, Mr. Chair. That's correct. The reserves right now are funded till the end of the year to make the current year commitments.
All right. So I'm going to move a deferral of everything, A, B, C, D, to our September meeting, and then hoping in the meantime that there could be, you know, some degree of consultation with the Community Foundation, and we'll probably know how the province is going to react to the casino's proposals to do the stage 3 reopening thing. So I had a little more information, and then I'd feel a lot more comfortable making this kind of decision.
So a motion to defer with direction for staff for consultation with Community Foundation and further information. Looking for a seconder. I got lots of seconders. Councilor Van der Stel was quicker. Okay. We'll call the question on the deferral.
I mean, yes.
The deferral on item 6.2.4 as amended carries unanimously on a recorded vote. Members of the committee vote in favor as follows: Mayor Davis, Councillor Van der Stel, Councillor Martin, and Councillor Carpenter.
Okay. All right. Going back now. That's all our items on our agenda. Number 5, we have no resolutions, no notice of motions. Questions from members of the committee.
Councillor Carpenter, if I may, I apologize for jumping in. I believe the committee separated item 6.3.3 2020 semi-annual investment report.
Yes, you're right. And I think who did I have down for that one? Oh, Councillor Martin. Sorry, Councillor Martin.
Yes.
Apologies.
Page 5 of the report, it talks about municipal loan investments, but it doesn't say what interest rate any of those investments are and how that compares with our other investments and loans.
Through Mr. Chair, I don't have that information available in front of me right now, but that is something I could provide in an email to members of the committee.
Yep, that'd be great. Thank you. That's all.
Okay. Then having said that, any further questions on 6.3.3? And I'll call the question on that, Mr. Clerk.
Mayor Davis is a yes.
Item 6.3.3 2020 semi-annual investment report carries unanimously on a recorded vote. Members of the committee voting in favor are as follows: Mayor Davis, Councillor Van der Stel, Councillor Martin, Councillor Carpenter.
Okay, now we're on questions. Is there any questions from members of the committee? Councillor Van der Stel.
Thank you, Chair Carpenter. You're doing a wonderful job today, I might say. Page 29, the negotiation, with the report that I didn't get the chance to ask a question on, sorry. Page 29, negotiation of the Tatula Heights water system agreement. I guess through you, Mr. Chair, that's a question for Mr. Hutchings. If I understand it correctly, that those negotiations have completed, and I think you were working on them not too recently. Is that correct?
Sorry, Mr. Chair, I'm just trying to find my buttons here. Those Tuttle Heights water agreements it goes with the whole boundary agreement. Councillor Van der Stelz, that's going to be a project of ours over the next about 4 to 5 months. We're actually meeting with our solicitor tomorrow to talk about that and how we're going to approach this. So no, that is not. It's a temporary solution. It's the one that was brought over with the boundary agreement, but we're looking at more longer term solution as per the boundary agreement, which is so the short answer is no. We haven't. It's not part of the deal. We're just working on that now.
Okay, but you are aware, and we are aware of the current water shortage that's happening in that area, and that the residents are having some difficulty with that. Would that be factored into our negotiations as well going forward?
Yes, it is.
Okay,
yes.
thank you. I just wanted to make sure it was there. Thank you.
Yeah.
Any further questions from the committee? Okay, seeing none, there are no private and confidential items, and we are adjourned. Thank you.
Thank you, Mr. Chair.
Yes,